All right. Hello, everyone, and welcome to Business Basics Friday. If you're joining us live here from Facebook or Clubhouse, feel free to post a chat where you're dialing in from or where you're streaming in from here in New York. And it is 59 degrees today. Who knows? It'll be 30 tomorrow, so you never know. So welcome again to Business Basics Friday. I'm Safietou Russell, CEO and founder of SDR Consulting, Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners. We have a variety of guest speakers to help share information and educate you on the many areas of your business that you may manage. As far as my background, I've been in the industry 20 years and I'm a CPA and enrolled agent and also have my master's in taxation. SDR Consulting Inc. is a virtual firm. We are based in New York, but we do have clients all over, and we mostly work with business owners, helping them with business startup and business cleanup services. As we go through the session, you can feel free to post your questions in the comments or in the Clubhouse back channel, and we will address them at the end. This is just informational, of course, no legal advice here and no specific client advice, just informational. If you want an official consultation or an appointment with our guest speakers, you can definitely contact us after the session. So I want to welcome our guest speakers for today. Today's topic is Business Basics Friday, learn how to take control of your financial freedom faster. So Business Basics Friday session, and the topic is learn how to take control of your financial freedom faster. And we have two guest speakers today, Amy Salo and Chenell McBean. So I'm going to go ahead and turn it over to them, and you guys can take it away. Thank you.
Hi, Savi. Thank you so much for inviting us to speak with you here today. Today, we are here to introduce you to basically a revolutionary way to accumulate wealth and achieve financial freedom faster through a software called Flow. My name is Chenell McBean. I'm a financial representative and flow strategist with Forest Hills Financial Group. I'm still relatively new in my career, but I'm moving along relatively fast. And so I often bring on senior advisors to help me guide clients in their financial wellness journey. And I really enjoy teaching people how to maximize their financial portfolio through holistic planning. At Forest Hills Financial Group, we are a comprehensive financial planning firm, and we have offices in Midtown Manhattan, Melville, Long Island, and across the country via Zoom. And I guess I'll turn it over to my partner, Amy.
Great. Thanks so much, Chenell, and thank you, Safi. We're so thrilled to be here. My name is Amy Salo, and I'm a managing partner at Forest Hills Financial Group and also a flow strategist. And we're excited today to introduce you to this revolutionary way of getting to financial freedom faster. So I hope you enjoy today, and we're looking forward to sharing this with you.
Awesome. Amy and I thought the best way to introduce this concept to you would be through a Q&A to talk about how it works, and then we'll open it up for questions at the end. So Amy, why don't you start by telling us a little bit about how Flow began?
Sure, I will, if I can figure out my PowerPoint here. You know, one of the ways that I have over the years loved to start meetings with clients when they come to us for financial planning is to ask them what their experience has been. So if you imagine you're in a room with 100 of your closest friends, I will say to people, how many of those 100 people are in perfect financial shape? They've done everything right, made all the right decisions, saved every dollar they should, not made any frivolous spending decisions, and they're just thrilled with where they are financially. And I often get a chuckle, or sometimes I get a number as high as 5. Usually it's 0, 1, 2, but never more than that. And that's really the reality of where we are in terms of saving. It's just a normal thing to not have saved as much as we should, and maybe not taken the time to organize our finances as well as we could. And really, there's a term for this. We call it lifestyle creep. And this is really what Flow is intended to address, is this idea of lifestyle creep.
That's a really interesting phrase, lifestyle creep. That doesn't really sound too good. Maybe we should take a minute to talk about what it is, What is your definition of that?
Sure. Lifestyle creep is really, here we go. Lifestyle creep is really just the way we tend to live our lives, right? Like if you start in your first job and Chenell, if let's see, you get a raise, right? And you have a little more money and you spend a little more money. I got a raise. First thought is, what can I go improve my lifestyle with, right? Is it a new pair of shoes? Is it a new bag? I mean, we're all women here, so let's be honest, right? What do we do when we get a raise? We go and improve our lifestyle. It's a natural, normal way to react. And then we run out of money and we look for another job or a better job or a promotion or a way to make more money. We work harder, we get a raise, and on and on we go like this. That's really the reality of what happens. And it's what we call our cash flow food chain, right? It's regular pattern of things if we don't interrupt it. So what's a cash flow food chain, right? If we look at the cash flow food chain, you get your paycheck, comes in, goes into your checking account or your bill pay account, your regular account. And then you deal with all of these things. You deal with housing costs, groceries, car payments, insurances, financial products, your Netflix, your Amazon, your dining, your travel, your et cetera, right? This is what ends up happening. So your money's earned, expenses go out, and savings comes last. So what effectively we've done is we've made financial freedom the last thing on our food chain, right? The idea of having more in the future than we have today or paying ourselves first is sort of abandoned right from go, because after you're paid, it lands in your checking account, goes to your bills, and if you're lucky, there's something left over to save, right? So Chenell, if you were to ask your average client who is maybe got their first job and they want to do everything right and make the right kind of decisions, how much do you see typically they're saving when you meet them?
Not much, honestly.
Okay. And over the course of time, if we look at maybe fast forward 10 years in the future, and an average number that we often use when we're running calculations and things is we'll show someone earning 4% more a year, 3%, 4%, 5% more a year. What's interesting is if we meet with someone who's 10 years into the workforce and we actually look at what their income is today, 10 years in, and then we do the math to figure out how much it would have had to increase each year to get there from where they were when they started, from their first salary, we find that number is often quite a bit higher than 4%. It might be 7%, it might be 10%, 13%. And that's because people get not only raises, but they also switch jobs. They get promotions, they add skills or education or designations. And as they do that, their income grows faster than at a regular annual raise sort of rate. So Chenell, when you meet with these people after they've been working for 10 years, we've got 10 years more experience, 10 years of raises and improvements and increases, how much do you often see that they're saving at that point?
Surprisingly, still, it would be not enough or not a lot.
Right. And I think we see nationally that the average savings rate of Americans is somewhere around 1%. Right. So It's hard to imagine how that will generate the kind of savings we need to have that financial freedom that we want. Right. Okay.
So I guess that speaks to this misconception that is associated with this belief that the more money you make, the more easily one's finances will fall into place. However, it sounds like it's a matter of not really having one's priorities in order, regardless of how much money someone makes. And we see that with this pattern of, I guess, spending first and then saving last.
Right. And the term that we've given that, right, is unconscious consumption. Right. So as your income goes up over time, which is normal, right, so do your expenses. Right? So our lifestyle keeps pace with our income. And we see this at every level of income. And there's no amount of stress that makes a difference, right? It's still a pattern that we see overwhelmingly across our client base, is that as income raises, so too do expenses.
Yeah, I guess and people are starting to become more aware of this trap that we've gotten ourselves into, but they're still having trouble finding their way out of it. And this goes beyond like opting out of these personalized or targeted ads. At this point, it's a bit more sophisticated than that.
Yeah, I guess so. I mean, here are some statistics, and I don't know if I have a little black Zoom window here, but what we see is that 78% of US consumers live paycheck to paycheck. Okay, and that's 78% of US consumers. So it really does cover all income levels, all education levels, all seniority levels. And we also know that 80% of former NFL players go bankrupt just 2 years after retiring. I know I've heard this statistic for years in the business. I guess it's just so shocking that it's a popular one to share. But this is the reality of what we see happening.
Yeah, I guess it's also more fun to plan for things that you will do with your success along the way when you can eliminate the guilt around spending. That guilt for some people is currently attached to every decision that they're making, minor or major. So we need to find a way to sort of free ourselves from that.
Yeah, absolutely. I remember a study that I read years ago, and I wish I could remember and give credit to the person, but it was a woman who had studied people and asked them questions about themselves, and they mapped their brain, right? And certain things lit up in their brain when they were talking about themselves now, today. And then they asked them about strangers, and asking this control group about strangers, these different areas of their brain lit up, and then they asked them about themselves in the future. And what was interesting about this study is the areas of the brain that lit up were more similar to strangers when they were talking about people in the future, like themselves in the future was more similar to a stranger than to themselves. And so it's very hard for people proactively to see future problems as today's problems and to make plans today to deal with 10 years down the road when you feel, rightfully so, like you've been working really hard, you got a bit of a raise, and you want to enjoy that in some way, whether it's
right,
avocado toast or new shoes or whatever, right?
Yeah, speaking of the avocado toast, I mean, sometimes we even have that guilt of adding avocado at Chipotle to our bowl, and it's like we shouldn't have to feel like that, So financial freedom, it should feel free. It should remove the pressure of having to think about money with every purchase. So how do we actually do this? How do we uncouple these two things, earning and spending?
Right. Yeah. And, it's really about reversing, as you said, the order of things, right? That's the key, because again, there are a lot of financial gurus, et cetera, who talk about budgeting and limiting and how many times did you add the avocado and, et cetera. And it just, it's not a good feeling. It's not something that feels free, as you said. It doesn't feel like financial freedom. If there's a whole pile of guilt and you're really limiting your enjoyment of things today in order to plan for tomorrow. So this is the key, right? It's just to reverse engineer this cash flow food chain. So instead of having your paycheck, the first stop of that paycheck being your checking account, what we practice as flow strategists is the first stop of your paycheck will be your flow account, right? And it's basically an intermediary. It's just a bank account, just like your checking account, but it's an intermediary account. So your paycheck goes into the flow account, and then out of the flow account would come everything that you need to pay your bills and live your life. And it can be every dollar you're earning today, right? It can be exactly the same cash flow that you have today to cover all of the expenses that you have today, goes into your checking account that covers your housing costs, your groceries, your car payments, your insurances, your financial products, Netflix, Amazon, dining, travel, et cetera, et cetera, et cetera, right? But what we've done is we've taken the financial freedom, the savings, right? That thing that creates your financial future, and we've moved it up to the top. We've made it the first priority of what it is that that you do.
I like the fact that it's, simplifying a system that is seemingly so stressful for people, whether they budget or not. So after you create money in the reservoir, what do you do with it then?
Yeah, well, this is exactly right. Our goal, all right, the end goal where we're trying to get is to where as your income grows, as we've seen, we see it across our client base. We have thousands of clients, and we see that from their first job to 10 years in the workforce to 20 years in the workforce, people's incomes do tend to rise, and they tend to rise faster than the pace of inflation. So all that we are doing by creating this intermediary account is we're causing your expenses to be conscious, right? So maybe your expenses rise at the pace of inflation at 3% or 4%, and your savings becomes unconscious. So if you do have your income go up by, let's say, 7% or 8% or 13%, but your expenses are going up at 3%, then what we see is you paying yourself first, and we see the value of financial freedom becoming clear very quickly, right? So as you asked, the first step is to open the flow account. And what we do with this is we just simply open a checking account. And that checking account, once it's open and the app is live and everything is all kind of set, then we will consciously meet again with our clients and make that move, right? And that move is to set a target amount that we want to achieve in that flow reservoir. And we're going to redirect at this point all of our paychecks into the flow reservoir, and specifically indicate how much money needs to come from the flow reservoir into your bill pay account every month. So again, it may be that the first step of this process of building this unconscious savings and getting to financial freedom is literally just redirecting your paychecks into the flow account and having exactly the same amount of money as you spend every month right now come into your bill pay account. And that's going to happen now in a controlled fashion. So if your employer pays you twice a month, but you would prefer to be paid 4 times a month, no problem, right? We can set up that payment to your bill pay account on whatever schedule you like. And this is what we call conscious consumption. We now know exactly how much money is coming into the account for your bill pay and exactly how much money you're spending. It allows us to do this in a way where if you want to add that avocado, kind of like the old days, if there's money in your account, you can spend it, right? So we've given you not only control over that savings, but also the freedom to treat yourself, when you're doing a good job there.
Awesome. It's like practicing discipline, but again, making it very simple. So thank you for that presentation. And I guess with that, Safie, I guess we'll turn it over to you for any questions we may have.
Perfect. There we go. Off mute now. That was very informational. Thank you guys for sharing that. I think you have one more slide as far as contact information. You want to go ahead and put that up, Amy? That'd be perfect. Okay, cool. So thank you. So thank you, Amy and Chenell, for both, covering that in a conversational way to kind of make it relatable. And I just want to kind of review some of the concepts you spoke about that are so normal that we don't even think about it, the lifestyle creep, the unconscionable spending, and the cash flow food chain. Like, we don't think about those things in terms of finances often, but that was a really good visual, I guess, of what's actually happening. And we see it across the board where, people are making more, and then they do upgrade, and then they do, um, buy more things, or, maybe make investments that may not be so great, they start doing things on their own. And that's really where, what it boils down to. Just like in accounting, they start doing their own bookkeeping, they start doing their own taxes, and then years later, there's errors, or years later there's notices. It's almost the same with our finances. When we are managing it ourselves and we're not doing such a great job, we got to take a step back and give the control to people who are qualified, to guide us in the right direction, and give us the tools like flow to help us get back on track, because it can definitely be a cycle. It can definitely be a generational cycle, and someone has to be the one to kind of stop that. And so this tool is great. I've had the pleasure of being able to get exposure to it as well, and I could see the benefit for everyone, not just business owners, but especially for business owners who have money flying in all over the place, and taxes that are not accounted for, and being able to put all those things in different buckets, but also remember to pay yourself and save for your future. It's not something that a lot of people think about, as we could see with the 1%, or whatever the statistics were in terms of how much people are actually saving. So we can just come out of the share screen here, and if there are any questions here on Clubhouse or Facebook, go ahead and post them now. And let me just pull up the live real quick. Okay, cool. All right, so I'm not seeing any questions just yet. The paycheck to paycheck concept, with 78% being in that bucket, maybe we can explore a little bit about what you've guys seen in terms of the pandemic, especially with, if you lose your paycheck, but you're living a paycheck to paycheck, what have you kind of seen happen to your clients, or just people in the industry that you've come across?
Yeah, that's very, very fresh for us, and for everyone. The idea behind this unconscious savings and this pattern that we're helping people to build is that extra money that accumulates in that flow reservoir, it's your money, right? And what we do as flow strategists is we meet with people every 3 months, and then we determine what to do with that excess money. And the idea is sometimes people may want to add a vacation, or they may want to do something nice for themselves, increase their monthly bill pay budget. But most of the time, what people want to do is build another cash flow engine, right? Another bucket that is generating revenue for them. And the goal over time is to continue to build these other cash flow engines, these other things that generate revenue, so that you are not so tied just to the income that you have from your job. And that's the true definition of financial freedom, right? So when the pandemic hit, and so many people were struggling, the people who had found a way to save and put money aside had more options than people who hadn't. And we were fortunate to have a ton of support, just nationally for people. And at the same time, there were a lot of people who really, really were struggling. And our goal is to help people get ahead of that, because whatever struggle is here today is just today's struggle, and there will be another one, a few years down the road. We won't know what it is or when it's going to come, but we know that whatever we can do to create this sort of unconscious savings pattern that helps people prepare and have other buckets to go to turn to in case of emergency, the better off they're going to be. So that is a big part of the goal here, is to generate other income streams that can be turned to if your job, if the income from your job stops.
Absolutely, absolutely. And that the key is the diversification, diversifying your income stream so that you don't have all your eggs in one basket. It's something that we practice in our household as well. Me in accounting, my husband's in the social work field. We also have an e-commerce company. So all our eggs are not in one basket. And thankfully, with the pandemic, we were fine. We were already virtual. Well, I was virtual. My husband became virtual for a little bit, a period of time, but we were fortunate. We had those things in place and they were not interrupted. But I can only imagine for those who did, jobs shut down, lost their positions, or businesses weren't able to operate. I could see where that may have been very difficult. And I also came across it with business clients in that they weren't prepared, not even just with savings, but some of the funding that was made available with the pandemic, like the PPP, the EIDL loans. They didn't have the proper record keeping in place or tax return filings in place to get those benefits. So it's kind of all tied together. Your personal finances are a mess. Most times your business finances are a mess as well. And so it's important to just get a handle on everything and get the help you need to do that, so that in the event there is something else, because there will be, and I agree, it's about preparation and being prepared financially so that you have the choices that you're going to need to be able to make in those times. So it's definitely about being proactive. And I know it's not the norm, it's not what we're taught, but as we can see from these last 2 years, it's necessary. It's necessary to make that change. Anything you want to share, Chenell?
No, I think we covered everything. Thank you again.
Perfect. Great. So I'm not seeing any questions. I went over the points that I wanted to cover. The last thing I just wanted to bring up, and it's not related to flow, but I did want to just kind of get your opinion on it, because I see it float around a lot. This whole profit first concept. I haven't really studied it as much. I've read a little bit on it, understand the overall concept of it. Of course, you need a profit first, right, to start it. But what are your thoughts on that, if any, that model that's out there?
The model you're talking about, just the idea of paying yourself first, of making sure that it's really a powerful concept. The idea, I think, if we were to expand on that, would be to do things in order. And for us, the first thing we always want to do, and I guess I'll preface this, even go back one step further, is that there's a time when people do want to manage their own finances, file their own taxes, and that's perfectly okay and appropriate. And there comes a point where it might be better to hand that off to someone else, right? And the key is to recognize when that point is, because the earlier that we get to people, and I know it's the same for you, Safi, the more we can help. So when we do get to people, the first thing that we look at is how we protect against the things that could go wrong today before we worry about tomorrow. And then we look at helping people become what we would call world-class savers, right? And so getting to that point is that idea of paying yourself first, because if you can pay yourself first, save money, create this unconscious form of savings, then we absolutely are certain we will be able to pay down all debts. We will be able to manage all other things that come up. We'll be prepared for things that surprise us, like pandemics. If we worry about those other things, right? If we worry about the pressures and the stresses of maybe lifestyle improvements or student debt or what have you, before we've gotten our financial house in order, then there are just so many more things that can go wrong. So paying yourself first is putting yourself in a position to always turn around and deal with the other things, right? Like if you decide to save first and you change your mind and you want to pay off the debt, you can do it. But if you pay off the debt first and then you turn around and try to get that money back, right? Doesn't really work in reverse, right? So it's just always about being a little bit cautious and making sure that you put your own life vest on first, sort of thing, and that puts you in a position to make different and better choices along the way.
Makes sense. Makes a lot of sense. I think we're trained to just have the leftovers, right? And it's funny with all the different automatic payment options, it makes it so simple, right? But then you don't really have choice, right? So if you get your check on the 15th and all your payments are automatically coming out on the 15th, then you have no choice but to deal with the leftovers. Maybe your automatic savings is in place, that's an option, right? But I think certain things that make it convenient, we may have to just get a little inconvenient so that we can make sure we take care of ourselves first, like you mentioned. And I think the idea of that flow account is key, to just funnel all your money through there, pay yourself out for your bills, pay yourself out for yourself, and then whatever's left, keeping it. And it's okay to not spend it, not spend every dollar, even though it's very tempting. So, all right, perfect. So I'm not seeing any questions. I think it was a great explanation. I'm sure everyone is going to get value from this, whether they're watching it live or on the replay or in the podcast that'll be out in a few weeks. So we can just go ahead and close out. I'm going to share my information again as we wrap up, and then I want you guys to share your information. So if anyone is open to making that change, they can definitely reach out to you guys and get the holistic view. For me, financial advisory was something I didn't fully understand. I just thought it was about opening investment accounts or life insurance. And then when I met you guys, it was like, wow, it's actually the whole picture, and you can help with the, debt and savings and, the investments and the insurance and the retirement planning, et cetera. So, so I can appreciate, companies like yourselves, like Forest Hills, that takes that holistic approach and not just a single eye view. So Business Basics Friday, we were here with Amy Salo and Chenell McBean, covering the topic of learning how to take control of your financial freedom faster. And I'm Safie Russell, CEO and founder of SDR Consulting, Inc., virtual firm based in New York. And we mostly work with business owners, helping them with the startup phase, as well as cleanup. So that involves consulting, bookkeeping, tax prep, tax planning, and also back tax filing, back bookkeeping, and dealing with the IRS estate if you do get into issues. We can be found online at sdrconsultinginc.com and on social media at SDR Consulting, or by phone at 516-255-6603. You can schedule a 15-minute complimentary introductory call. All right, so Amy, Chenell, you guys want to close it out?
Yes, if anyone is interested in learning more about building up their financial portfolio, please feel free to reach out to me. My email address is my first name dot last name at FHFG. So that is Chenell, CHENELL .McBean, MCBEAN at FHFG.com. And my number is 631-589-5540.
Thanks so much, Safie. We're so thrilled to be here and really appreciate the opportunity today.
Thank you. Thank you guys for taking the time to share, and we'll stay in touch for sure. And everyone, enjoy your weekend. Stay safe out there and have a great day. Thank you. Bye-bye.
Thank you. Bye.